Hello, hello. Hi there, hi guys. Hi, trade engineer. I think we can't hear you.
Hello, can you hear me?
Yes, we can hear you now.
All
Awesome.
right, okay, great. I think my comm is very laggy today, unfortunately. I'm still seeing the countdown, but good that you can hear me. Um, yep. So yeah, glad everyone is able to make it today. For our live sharing. Yep. Um, so yeah. So if you are here live with us, right, do give us a like or a love, right, so that we know that you are here live with us. And today is a very special day as well, right? Today is Father's Day, right? So hope everyone is enjoying their Father's Day so far. Like financial busy, how have you been spending today, the Father's Day today?
No, I'm very busy. I've been working. I've been working and my dad has been working as well. Everybody's working. My brother's not around. So I guess it's just another day for us. How's yours?
Oh
How's yours?
dear.
How's everyone's?
Yeah. Maybe you can leave it in your chat, in the chat below, or in the comments below, right? How did you guys actually spend your Father's Day so far? Like you bring your fathers out for a good lunch, or are you planning to bring him out for dinner later, or you giving him a present, right? Do let us know, right? I'm so curious to know how everyone is celebrating their Father's Day so far, right? So for myself, I just brought my dad out for a meal, right? Just a simple meal, and that's about it. Yeah.
So
All
sweet.
right. Thanks. All right. So today we're actually going to go back to our routine sharing of a particular stock, right? And today we're actually going to share on this particular stock called Raytheon Holdings or Raytheon Technologies, right? RTX. I don't know whether I pronounced it correctly, but basically the ticker symbol is called RTX, right? And you can see it in the banner below. Right. So not sure if all you know what this company is doing. Um, but if not, right, you just stay tuned and we shall delve into the details for this particular stock. Right. So for this stock, like most other US stocks, right, it has corrected a fair bit, right? Not too much, right? It actually only corrected by about 16%, right, from its all-time high, right? But nevertheless, it has retraced a bit, right? So we thought it's a good opportunity, right, to talk about this stock, right, especially with the Ukraine war going on and this being a defense company, right? There could be some catalysts. There could be some things that we can look forward to for this stock, right? So yeah, we thought it was a good opportunity to actually share this stock with all you guys today. Right. So without further ado, right, maybe I'll just invite FINANCIAlmissy first to start the ball rolling, right, of this particular stock. Right, FINANCIAlmissy, are you ready to share?
Yes, I am more than ready to share. So, hey, hi, Luke. Hi, Luke. Thanks for joining us in today's session. It's really very nice to see you around. If you guys are here with us, live with us, please do give us a like so that we know that you are there with us and you are ready to actually hear our sharing. Right? Do give us a like, some love, so that we know that you love it, and we will be more excited to actually do this, more motivated to actually do this more on a weekly basis lah. If otherwise a bit sian, if nobody give us some response, like we are talking to ourselves. Yep. So please do give us some like, some love, so that we know that you guys are here with us. While doing that, let me just share my screen. Oh wait, press the wrong button. Share screen. Yep, so this is the one. Okay,
Right.
it's my screen up. Is my screen up?
I'm trying to put it up. Wait, do you see it up?
Okay, no problem. No, not yet. Oh, yes, I do. Okay, so first and foremost, right, because today I'm going to go a bit beyond the usual framework that you see that I normally present. So I really have to give a disclaimer from the start of the session to say that any views, opinions, references, or anything of any sort today that I'm going to share or the trade engineer is going to share is nothing more than our own personal point of view and our own strategy, and it should never be seen as a financial recommendation or advice. Please do take note, yeah, because you have to do your own due diligence for we are always wrong. Every one of us has our own strategy, and whatever we can share with you guys is only for your consideration. Please do not take it as a financial advice. No, no, guys, no, no. All right. And let me move on. All right, so I do love this page. I frequently forgot to ask people to show us some love. So I specifically put a slide there. Please do show us some love. In any instance, if you have any comments or anything that you want to discuss, please do feel free to type in the chat so that we know what is your personal point of view, and we can actually do some sharing, some more intimate sharing rather than the one-way traffic. One-way traffic is always so boring. If it's about one-way traffic, you just read a book or read online. You don't need people to do it live. So please do participate, and we would really love to hear from you as well. All right. So like, love, share this video so that we actually be more motivated to actually speak more with you guys. So without further ado, right, before I start proper about the stock itself, let us look at the market. I always love to look at the market. What is happening in the market right now? There's a lot of bearish sentiments currently in the market. A lot of people are talking about recession. We were wondering whether the Fed increasing the interest rate hike will actually benefit the economy. Is it really going to benefit the economy? Okay, that's something for us to think about. A lot of things is happening in the economy right now that I really, really have to actually, really, I don't know how to put it. I really I really want to tell you guys to really be safe. You really need to take on the safe stance first. If you guys are in the market or thinking of entering the market, never ever catch a falling knife. Never ever, please, guys. Hey, hi Nicholas. Thanks for commenting. Right, never ever catch a falling knife, please, guys. Right, there's a lot of things that's happening in the market, and a lot of people are talking about an impending recession. Okay, let me show you what's happening. You see, I just went to Google. I just typed in recession, and there are just a whole list of companies laying off employees. Tesla, Shopee, Coinbase, BlockFi, Crypto.com. Crypto.com. I mean, Crypto.com is actually from Singapore itself, and it's not a small company. A lot of people actually invested in Crypto.com. I myself, I was thinking of whether I want to have a Crypto.com metal credit card. It looks so cool, right? Hey, it's a metallic credit card. It's so pretty. I mean, I love the card. I was thinking of whether I wanted to actually put in some money with them to actually get the card, but I did not, thankfully. There are so many companies that are having recession right now, are laying off their employees right now, and it's just a very simplistic slide that I put up. If you guys actually do Google, you can scroll up the whole list of companies that are currently laying off employees. Let me just show you guys what are the others. Let me just stop share this page first and go to Windows. Yeah, let me just share another screen to show you guys how bad it is. Okay, let me share this screen. Trade engineer, don't mind help me to share this screen. Is trade engineer there?
Hello, can you hear me?
Hi. Yes, I can. Can you help me share to this window?
Yep. I'm sharing. Do you see on the screen?
Okay, yes, thank you so much. So look at this particular web page itself, right? I have no idea about the credential of this web page. I have no idea who is actually at the back of this web page. I do not know, but just take a look at this. Just take this as referencing, okay? Notable 2022 U.S. tech layoff. In tech itself, look at this bar here. This whole if I scroll, it's just so many companies currently in US that is actually laying off employees. Like you see, PayPal laying off, Netflix laying off, VRoom laying off. There's just so many. Like when there's a recession, when there's a pending recession, especially, what is one thing that happens before a recession to really say it's recession is, of course, there's a recession of employees, right? Common sense. So you see, there's so many companies um undergoing like some companies laying off their employees, and what is happening in Singapore, right? Probably have not touched the peak yet. It's probably just a script through, like how Tesla is laying off its manager in Singapore, or how Shopee is actually laying off some of the employees in Shopee itself. It's just scraping the top. We have not properly entered recession, okay, of which it is going to come up. Why is it going to come up? Very simple. Let me also show you this continue my slides. Trade engineer, sorry to disturb you. Don't mind. Right, okay. So back to this slide. Look at this slide. Let me move on to the next page. This is the market sentiments for June itself, June this year itself. The market is going down, down, and down. It has actually broken the support line, the very strong support line, and it reaches the very first stronger support, the bottom support line, the second upper dotted line, right? So it's already reached there and it's already broken through. Whether it is actually going to go further, it really depends on next week. Why? Because you see, right, ever since the Fed actually announced a 75 base point interest rate hike, the market rebounded. No idea why. People think that the market rebounded, saying that oh, finally announce a confirmation, no need to speculate, and it might help the economy. But does it really help the economy? The next day after the interest rate hike announcement, the market went to realization, showed us a very big, huge red bar, of which on Friday itself, the market is undecided. Is it going to go up? Is it going to go down? So it's probably going to hover around the dotted line. And whether if it really breaks through, right, it might reach the bottom dotted line even. We do not know. This is actually all speculation. But what I'm trying to say right now is the market is very bearish. We have already entered the bear territory and it will go downwards. There is no signs of reversal. There is no news in the market that says that, the market is going to go better or anything. Nothing. Okay, based on chart itself, based on theory and based on chart itself, it is very bearish. All right. So please, guys, do your due analysis. Do your due diligence. Manage your risk. Don't invest unnecessarily big I mean don't go in unnecessarily with a very huge sum that you might not be able to sleep at night. That is very not recommended. All right. So what happened? Latest development, right? We see that interest rate hike increased 75 base points. So far until now, in total, right? If you add up the previous interest rate hike, we have reached 1.75% already. Moving forward, there should be about another 3 more that we are going to see this year. Some analysis has already predicted that it might go up to 4%, 5%. We do not know. How does it translate to Singapore? Singapore dollar is not directly pegged to USD. That's a thankful part. But nevertheless, right, we want to know that what happened developments in US actually indirectly also affect Singapore. All right, that is no brainer lah, huh? So with US increasing the interest rate hike, right, you can see that there's a lot of different avenues in Singapore that is also increasing our own interest rate already. For example, housing loan. Housing loan, I think it used to when I first started looking at houses and the loans, I think it was 1.2 thereabout, increased to 1.6, 1.8. The highest I know was actually 2%. Housing loan is going to increase. Car loans, loans, what else? There's personal loans. Even in the finance world, because I'm personally in the finance industry, there are endowments that are coming up with higher interest rates. Why? It's because of the Fed. If the Fed announces higher interest rate, this is how it's actually going to implicate Singapore. And if we are not prepared for it, then that's where we are actually stuck into it. Right? Yeah. Even if the increase in interest rate to 1.75 and moving forward they might increase to 4 to 5%, does it really help with the economy? It's very simple. I would personally feel that it doesn't help because why? Yes, you increase the interest rate, everything gets more expensive, the demand will decrease. Okay, but no matter how much the demand will decrease, the problem does not lie with the demand, the problem lies with the supply. Are we going to increase the supply? If yes, how are we going to increase the supply? Because there's a lot of things that's happening in the economy that has far beyond affected the supply demand chain, right? So even if we help with the demand, the supply doesn't, and with the increase in interest rate, right, it's going to make big corporations, less willing to borrow money. Recession is going to come up because they don't want to borrow money. The prospect is not there. They're not going to spend more money in the economy. And that is also where it actually promotes or push for a recession. So no matter how you think left, you think right. No matter how you think, it just leads you to one road, which is it is inevitable that a recession is coming up. How badly, I do not know. Honestly, if I know, I would be an economist. I'm not an economist. I do not know how bad is the recession going to be this time round. But previously, right, recessions have been, or market cycle has been every 10 years. And when is the last market cycle? It's back in 2008. Lehman Brothers crisis, the financial crisis, right? It's been long due. Okay, and don't forget, if you look into the historical history of the states, right, where US has been increasing their debt year on year, and with the trend, right, increasing, if you use a debt versus the recession period, you will actually notice that increasing debt will, when they increases the debt, right, over the years, the period of recession also increases as well. So is it going to be longer than the previous one? I cannot say for sure, but based on historical, based on the immensity of current situation, highly likely the financial crisis took about 7 to 8 years till when they see actually the economy went back up to the peak before the crisis. This time round, will it be a 7 to 8 years? I do not know. Will it be a 1 to 2 years as well? I do not know. But for me, my personal thing is it's going to be very long, right? So please be safe out there. Do not think that um do not rush into any investments. Do not rush into resigning or anything. Please be safe. This is not a time for you guys to um I don't know. It's not a time for you guys to be creative or do something extreme. Yeah, please be safe. Especially in this period of time, it's very volatile, and the volatility will only increase. Okay, and not to forget, right? There's also this Ukraine-Russia war. It's been a long standing since February 24, and I no longer follow up on the news. But what I understand for now is it is still fighting. They're still fighting, and the EU just backed up Ukraine even more. And so I have no idea what's going on, but it doesn't show any signs that it will stop. So please be prepared. This is also partially why my dad actually mentioned to me like, hey, since you're investing, why not look into the defense sector? Like, when even when there's a recession, right, the people are not earning much, the economy is not doing as well, but is there a possibility where the government would say, hey, everything is not doing well, I don't invest so much in defense. Is it going to be that way? No, right? Especially with the Ukraine-Russia war, it's not going to be that way because people will be looking into defense. How can we strengthen our country such that it will not be, I don't know, conquered by other country, or other country will not take this opportunity to conquer us, that kind of thing. So people, no matter recession or no recession, no matter the economy outlook, a country will always invest in their defense, their very basic defense. All right. And that leads to us, what are we expecting next week? We're expecting to see what is the latest update in the consumer sentiment index. Is the consumer sentiment index going to go up? If it does, not a good news. I'm not sure. I mean, some people will think it's a good news, like sentiments go up, that means people are still positive about it. But for me, if consumer sentiment is still up, that means recession is probably still going to linger, not yet, and then the interest rate is going to go up, and more problems lah. So this is the double-edged knife, depending on how you want to see it. And of course, you want to wait for the home sales report for May that is coming up, I think, if I'm not wrong, on Tuesday itself. Why is it so important? It's because before any recession, we will actually see the home sales in the States, because if people are not buying, people have no money really, then they're not buying and everything's declining, then that's also another signal that a recession is coming up as well, right? So with all in all, right, this prompted me to actually look more into the defense sector, and today we are going to talk about this company RTX. Me too, I have no idea how to pronounce this word. Raytheon Technologies. I do not know. I'm not saying that this company is a very good company for us to all invest in or look in, because why? We are trying to change our model as well. When the economy is good, we can look at stocks to actually invest in. But when the economy is bad, you also can actually look at stocks to actually short the market. So as an investor, especially investors who are lazy investors like I am, we normally look at long-term investment, right? We want to enter the market, look at long-term investment, put in our money, close to eye, sleep with ease, knowing that the company will actually last at the end of the day. But then if it's in a bear market, is it possible for investors, knowing that this company is not good, not as good, or whatever reasons that you have, can we also take the opportunity in a bear market? So this is why we just took a very random stock in the defense industry to analyze, to see whether we can just pick any stock easily, either via your stocks screening tool, or via Finviz, whatever screening tool that you guys have, to see whether is there any opportunities in the market. Because why? If you guys know how to invest, knows how to trade, everywhere is an opportunity. No doubt. You can go up, you can go down, you can go sideways. All right. So without further ado, if you guys are ready for us, or rather ready for me, because I'm the one sharing right now, ready for me to actually share this particular company, do show me some love, some light, so that I know that you guys are ready with us. Okay, I forgot to take my water, but never mind. Without further ado, okay, thank you for showing some love and light, yeah. All right, so today we are going to talk about Raytheon Technologies, RTX. On Friday itself, it closed at $88.88. All right, which also dipped lah. So it's actually a defense, it's an aerospace and defense company, of which it doesn't show a very positive response to the stock market on Friday itself, although we are expecting a recession. So what does it do? Many people might not know about this company, so I actually took this description off as well. So Raytheon Technologies Corporation is an aerospace and defense company which provides systems and services for the commercial, military, and government customers worldwide. So it specializes in three things: commercial, military, and government customers worldwide. What it does, it offers aerospace defense products, aftermath servicing solutions for aircraft manufacturers, airline, blah blah blah. And it also supplies aircraft engines for commercial, military, business jet, general aviation customers, etc. And it also helps with this integrated space communication sensor system for missions, training, and cyber software solutions to intelligence defense, federal, and commercial customers. And another aspect of it, right, actually helps to design, develop, produce, and sustain integrated air and missile defense, defensive and combat solutions, land and sea-based radar, command, control, communication, and intelligence solution for naval and undersea sensor solutions for the US and foreign government customers. So reading this, right, it's a very huge chunk. But whatever it is, just take note that it works for three ways: commercial, military, and government, of which the military and government, they have different arms to actually deal with it. So this company is not solely serving the government, it's not solely serving the military, they are also doing the commercial aspect. All right, for US and for white. Okay, so with all these tech companies, right, defensive tech companies, one thing that will actually raise our mind is this company new? Because if it's new, then where's the credentials in it, right? And with tech, right, with all this aviation, another thing that won't come to our mind, right, is, hey, how about the next big thing that's in the economy right now, global warming? Is it going to contribute to global warming? How is it going to help? And how bad is it contributing to the pollutions? That's where we see. All right. Do a bit more research. That's where we understand more about the company before entering. Never enter a company that you do not know what is the business is about. Never. All right. So looking into the history of this particular company, we know that in 2008, it's actually being identified as the 38th largest corporate producer of air pollution. In 2016, it ranked number 9 by a toxicity population exposure score. Okay, so in terms of pollution, it is one, I would say, is one of the major producer lah, putting it in this way, that it's the 8 9, so one of the biggest can have a lot so one of it lah. So all these studies are actually taken from actually done in US. I think it's done by University of Massachusetts. Sorry, I can't pronounce that word, but don't laugh at my English. Yeah. So if you want to know more about the amount of pollutions that this company is actually producing, just go and Wikipedia. It's all there. It's all there. And not to forget, right? Raytheon Technology Corporation. Previously, it is not known as it is. Previously, it is actually known as something else I can't remember. Of which in April 2020, it actually was being purchased over by United Technologies Corporation to form up this name as Raytheon Technologies Corporation. Okay, so it's acquisition in April 2020 itself. All right, and what is happening right now because of all the movement towards green energy and all? So yes, the Air Transport Action Group and the International Transport Association actually set a goal to achieve net zero civil aviation carbon emissions by 2050. So guess what, guys? Did Raytheon decides to commit themselves? Of course lah, they must commit themselves lah. Being one of the biggest and work with government and work with military, they have to commit themselves, and this is their promise. All right, they say that 2% of global emissions comes from the aviation industry. As such, they want to reduce the carbon dioxide that is being produced by their products using sustainable aviation fuels. Sorry. So there are different kinds. There are fossil fuels, there are hydrogen. I do not know how they are going to do it. I'm not an engineer. Maybe the trade engineer has better insights to how they can actually change I don't know, their fuels to actually help with their their products, but I'm not an engineer, so I have no idea. And of course, they also say that 80% of emissions actually come from long range flights, of which they want to reduce in their regulated emissions from GTF engines. can't remember what is GTF engine. If you guys are interested, you can just go on Google GTF engine, what is it? All right. Okay. So at the end of this very particular article that was published by Raytheon Technology Corporation, I saw they said that this is something that they are committed to doing it. Committed to doing it. But they also say realistically is another thing. They said it themselves, realistically is another thing. They are committed, but they see how they can actually achieve it. Okay. So being committed is one thing, realistic is being another thing. So don't forget, guys. Okay, and in terms of financial health, what does this company do? PB ratio 1.82, not the best, a bit overvalued. ROE is 5.82. ROE 5.82 is actually not very good It's very little we look at the debt to equity ratio. This company, in terms of debt, financing is actually very healthy, less than 0.05. Is actually good. But if you look into the financial statement, you will actually know that the revenues, income, profit is unstable, the growth is unstable, and the cash flow for this company is fluctuating and it's very unstable. What does it mean? What does it mean? It just means that in terms of fundamentals for this company, it's not good, right? Or rather, if we don't put it as not good, we can also say that it's not as stable as other companies in this industry. So when you see that the general market trend, the general market trend is on a downward trend. Yes, we know that defense sector is something that is very defensive. That is something of opportunity, but that is our speculation. That is our perspective. Look into the company itself. We know that company is actually not financially very sound. So when everything is in alignment, right? Do you think that this is a company that you can potentially short? Might? How confident are you that this company will actually do well in the next 5 to 10 years? Maybe not. You can look at taking opportunities when it's a very clear trend. General market downline, company not good. Why not take an opportunity to short it? For your consideration, guys. So if you look into it, right, into this company itself, putting up some chart, we can see that for the past 22 years, on a monthly basis, right, is a weekly chart. On a weekly basis, for the past 22 years, RTX is actually on an upwards trend. But this trend is pretty flat. Okay, there are a lot of other companies that if you pull up the chart, you can see that it's increment of thousands over 20 years. For this particular company, it's only positive 238% over 22 years. People who are more conservative would say, hey, 238 not bad, 238 not bad. One year is about 12%, not bad. But if you are investing in US companies, this kind of increment not very attractive right? Nevertheless, let's look into it in daily chart. Okay, I draw this line. This is the trend line. Look at the trend line is currently on a very direct and obvious downtrend line. Company is the stock market is showing that it is quite bearish, right? For now, since early, I think late April, it's already in the bearish stance. And we draw another resistance line. You can see that we are still quite far from the basal resistance line. How far can this stock fall? High potential that can fall further. There's very high potential. Drawing the simple moving average 50 over 150, you can see that yes, we are still having 50 over 150, but the 50 is actually on a downward trend. What does it mean? That any time should these stocks continue to actually move downwards, you can see that the 150 will cross over the 150. Sorry, what did I just say? 150 will cross over the 50 to show that the stock is actually on a downward momentum. And when that happens, that's where investors can actually take opportunity to short the stock from when it actually has a turnover to when it turned back to the positive range, of which must please take note of certain key pointers, of which is actually the resistance line. All right. I hope that you guys are still here with me and you do understand what am I talking about. If you do not understand what am I talking about, please type in the chat because I do want to hear from you as well. Okay, so this is from my point of view that if you want to invest, if you are investors, always invest in fundamentally strong companies if it's going upwards. All right, if the whole economy is going up, invest in strong, fundamentally strong companies. But if the market is going downwards, we can also take opportunities in fundamentally not strong companies to ride the momentum. Most importantly is ride the momentum and not against the momentum. Okay, so what goes higher can go higher. Similarly, what goes lower can go lower as well. So if there is nobody with any questions, that's the end of my sharing. So please do remember to like and share this session so that I'll be more motivated to actually share more with you guys next time as well. So that's all I have, and over to you, Trade Engineer.
All right, great sharing by FINANCIAlmissy. Thanks, FINANCIAlmissy, for sharing your insightful insights, right, of this particular stock. Right, so I hope all of you have gleaned something very valuable, right, in this session, right, both for the macroeconomic point of view as well as this particular stock. Right, and don't forget to click that like or love button, right, if you enjoy the sharing so far. Right, so yep. Onto my segment, right? So just now I had some technical difficulties, and fortunately it's sorted out now, so I can see everyone. I can see the screen. Yep. So yep. So let me go delve into my section proper, right? So I'll be delving more into the technical parts of it, right? Being the trade engineer, right? And I hope this will also give you some value, right? If you're looking at this particular stock. So let me first share my screen. All right. Yes, and here's my screen. Right. So this particular stock, right, RTX or Raytheon Technologies, however you call it, right. So it has come down quite a fair bit, right. Not too much. It was 16% for its all-time high. Right. So what's my view on this stock and whether this is a buying opportunity? Right. So that's what I will be studying for today. And before I begin, right, don't forget to click that like button if you're still here live with me. Right, so this is the stock we are going to talk about. And here is the price chart, right, for Raytheon Technologies, right, RTX. And this is on the overall price chart, right, from the daily basis. Right, so you can see, right, in a nutshell, right, basically the stock price has been climbing quite a fair bit. Right, it actually dropped, sometime in 2020, right, before it actually rose up. His all-time high around here, and now it corrected down about 16%, right. It actually hit its all-time high, right, about on 20th of April, 2022, right, just a few months ago. And its all-time high price was about US dollars 106, right. And fast forward to today, right, 17th of June, right, last Friday, the closing price was 88.88, right. So very nice number here, right. Like, basically you what 4 times, right. But basically, if you're holding this stock since April, I don't think you're hurting a lot because you're actually losing money. Yeah. So this is not too good news, right? If it actually continues to go down even further. Right. So it's actually down 16%, right? If you do the math. And let's look at some recent news, right, surrounding this particular stock, right, to get some background and to get some understanding, right, of this stock. So here is one particular article, right, from barons.com, right, talking about Raytheon, right, this particular stock, right, and in this article, right, on the April 26th, right, just a few months ago, just after it started, falling, right, it actually mentioned here that this company expects sales to fall, right, and primarily due to the Russian sanctions, right. So if we delve in the article deeper, right, what it actually mentioned, right, that this company is actually cutting its full year sales forecast, right, at that time, right, and the reason cited was the Russian sanctions, right. So revenue-wise, right, it was estimated to be still quite high, about 67.75 billion to 68.75 billion. But although this figure seems high, it was actually lower than the range given previously back in January, right? So it is expecting some further downside to come. Right, and in the first quarter, this company also took a hit of about 300 million in charges and adjustment of all expenses related to the Russian sanctions. Right, so that was a big hit to them. And there was also about 80 million in sales that did not materialize due to the impact of it. Right, even on the website, it also stated that it has suspended operation in Russia, just like a lot of other US companies. Right, and all sales and support services to Russia civil aviation industry. Right, it has also had that joint venture in the region, and that's something that it is not going back to, right? Because it is not operating in Russia anymore, right? And this joint venture will also be suspended. Right, so that that also means some revenue will be lost as a result, right? And this joint venture will actually together to build parts for big companies like Boeing and Embracer, right? So all this is now closed, so that is going to affect this company as well. So this particular article actually took a pretty a bearish stance towards this company. Right, it actually feels that this company might not be might see more downside in time to come, right? Right, and we delve deeper in the article, right? It also mentioned further details, right? That Russia actually make up about 1.5% of its total sales, right? And although the company said that they might be able to offset that, right, through cost reduction, but 1.5%, it might seem small, but it is also not particularly small, right? For them. Russia is also a large source of some of the titanium and casting supplies for this company as well, right? And with that, on the sanctions list, right, they need to source for other alternative supplies, right? But of course, at the end, they still mention that they are confident, of the long-term outlook, right? And especially, with the pandemic, easing up, people are returning back to travel, and as a defense company, right, every country will still have to invest in defense, right? And with the Ukraine war as well, a country might be more willing to invest more money in defense. So that's something that could be a positive catalyst for this company if it actually wins, more of such contracts, more of such defense contracts, right? Right. So I think just now, FINANCIAlmissy also mentioned a bit about Raytheon, right? But in this article, also mentioned that it has a few other units, right? In Raytheon, right, such as the aircraft engine manufacturer Pratt & Whitney, right, sensor solution provider, right, intelligence and space, and its missile and defense, right. So these are the 3 units, right, that makes up Raytheon, right. Additionally, you also mentioned that there are some supply chain constraints and challenges, right, on certain land warfare air defense program that impacted its missile and defense sales, right, in the first quarter, right? But the higher commercial aftermarket sales, right, also offset that lower military sales volume, right? So that's both plus and minus here. Right, so that's the article, right, that actually offers a bit of a downside view, right? And this is another article, right, offering a different perspective, right, of Raytheon stock, right? So this is taken from seekingalpha.com, right? So in summary, they actually highlighted a few things here, right? First of all was the ongoing recovery in demand for commercial aviation parts and equipment, right? So that is something of a positive, right? As what I mentioned just now as well, supply chain disruptions, right, have limited sales for key defense segment weapon system, right? So that is a bit of a minus, but there's some outlook that points towards stronger growth going forward. But in this article itself was actually pretty bullish, right? Pretty bullish, and let's examine why, right? Let's examine why. So first of all, we got to look at some of the recent earnings, right? So we only have the latest result in Q1, so there's something that was shared. Right, so Q1 results, right, its earnings per share, right, of 1.15 actually, was higher, right, 28% higher from the period compared to last year, and it was above market expectations, right. Revenue was also higher, right, 3.1% year over year, although that was slightly below the estimate. Right, so the story for this quarter was actually the strength on the aerospace side balancing some weakness in the defense group. Right, so that was the story for the Q1. Right, and here's was the chart that was shown in the Q1 presentation. Right, so there are some positive you can see over here. Right, so you look at sales wise, right, there was it is higher, 15.7 billion compared to 15.3 billion back in 2021. That's amounting to about 4% organic growth. Right, we look at earnings per share, right, EPS. Right, you actually see that both on the GAAP or adjusted, right, both points of view, also we see that the earnings per share is higher as compared to the first quarter last year. Right, and cash flow is also positive. Right, cash flow, the free cash flow is still amounted to about 37 million, right, over here. Right, so so all these seems pretty positive, right, at least on their first quarter result. Right, so if we look further, right, in further details of their earnings result, right, basically they also mentioned, like, Collins Aerospace and the Pratt & Whitney businesses led growth with adjusted sales up up about 10% and 12% each. Right, so this was 10%, this was 12%. Right, right, and that's why I mentioned ongoing rebound in industrial air traffic. People are returning back to traveling, right, and that also translated to strong demand, right, for commercial aftermarket parts. Right, so this also bring business for this particular company. Right, but I know that these supply chain constraints, right, in terms of the intelligence and space and defense and missile category, right, and the revenue actually declined in both these areas, right. Yep, and as what I mentioned in the previous article as well, we already know that this company has exited the Russian market completely. Right, and the other thing to take note for Raytheon, right, is its dividend increase. Right, so it actually increased its dividend, right, lately, right, to 8% year on year. Right, so it actually has that history of increasing dividends. In fact, it's known as that dividend aristocrat with a 28-year history of annual dividend increases. So there could be some catalysts. Some people might want to go to dividend stocks, right, and this might be a company that consistently paid out dividends, right. So looking into more details, right, of its dividends, right, it has actually, its dividend coverage actually represents an annual payout, right, of about 3.3 billion. And this is actually sustainable, right? If we look at the earnings, right, it's actually well supported by its underlying earnings, right? And management, right, the company management also has some intention, right, to actually buy back, approximately 2.5 billion in stock, right? So it's showing some support for this particular stock as well. Right, and its balance sheet, right? Balance sheet wise, it also looks pretty solid, right? It actually ended the quarter with 6 billion in cash and equivalents, and against 31.3 billion in long-term debt. Right, so if we calculate the debt to EBITDA leverage ratio is about 2 times, right? And if you compare with other similar companies, it's actually a pretty strong level, right? It's not overly leveraged. Right. So to move on, right? Actually, this article also mentioned a few other things as well, right? With these earnings in perspective, right? What you highlighted here, right? Is actually that this company has actually outperformed, right, the broader market. So if we look at S&P 500, for instance, right? It hasn't fallen as much as S&P 500, right? It has also been an upward trend over the past year. Right, with all these catalysts, like improved outlook in the air travel, the Russian-Ukraine war, right, also causing some positive catalysts for the stock. And this particular article actually likes this stock, right? It actually likes this stock. Why it likes this stock is because it's diversification across aerospace and defense, right? So that includes some civilian aviation exposure as well as some high-profile weapon system. Right. In fact, some of its machinery, right, had actually made headlines in the recent Russian-Ukraine war, right? So in particular, this Javelin anti-tank guided munition, right? As well as some other missiles, jets that are also being used in Ukraine. Right. So there was also an interview, right, with the CEO of the company, right, and he expected that there's new order to rebuild this inventory through next year, right, with all these weapons being sent to Ukraine. But there's that supply chain disruption, right, for key manufacturing input, right. So that is maybe a challenge for the company, and the company is actually doing something about it. They're actually going to redesign some components based on the availability of material, right. And if they actually succeed in that, that could be a positive plus point for the company, right. Right. So it's also important to recognize that the missile and defense segment has a wide variety of in-demand products, right? And all this is on top of the existing segment backlog of 29 billion. Right. So actually, it actually views that if this missile and defense segment actually takes off, right, there could be a lot of catalysts for this company. Right. There could be a lot of catalysts for this company to actually make headway in the future. Right, so that was the article stance. So the one article was a bit bearish, and another article was a bit bullish on it. And this article is more neutral. It's actually just taken a few days ago, June 17, right? And it was actually showing some recent news, right, with this company. Right, so this company actually, right, has just won a contract, right, to build standard missile 3 block missile, right, with electro-optical guidance, right, for missile defense. Right, a lot of cheap things here, but basically, it just won a contract, right, a big contract here, right. So what it does, right, what it will be doing, right, we'll be building surface warship and land-based missile, right, designed to acquire, track, destroy incoming ballistic missiles, right, and this contract is actually worth a whopping 666.6 million, right. And who are these for, right? Who are these for? These are actually for the US military as well as Japan government, right? So this is something to look forward to for this stock. But do take note that this is pretty long term, right? By the time this is completed, right, it is 2026, right? So that's 4 years from now, right? So it won't be anytime soon, right? So this is something just to take note, right? But nevertheless, it's won this contract, so it has at least some business in for this, from now to 2026, right? Right, so that's quite a bit a lengthy background for Raytheon Technologies, right, RTX, right? Hope that gives you some background for it. But we also want to know what to look out for, right, in time to come. What is the future, right, for RTX? And to do that, right, we look at the technicals, right, to give us some insight. But before we do so, right, if you are liking what we are sharing so far, right, do give this video a like or a love once again, right, so that I know that you are adding value to all of you guys out there. Right, and let's proceed to move to check out the price chart for more details. Right, so here's Raytheon Technologies RTX on the daily chart, right, on the daily chart, right. So first of all, you can see this one line that I drawn, right. This is actually called the uptrend line, right. It has been tested 1 time here, 2 times here, 3 times here, 4 times here, and it came down slightly, rebounded back up here, right. So it also tested successfully here, but recent times you can see that it has broke below this uptrend line and hasn't crossed back up ever since, right. It has been trading below this uptrend line, right. So this is actually quite a pretty long-term uptrend line, right? This uptrend line has been supported since 2020, right? Since 2020. And if you look back when it actually broke over here and didn't come back, right? That was actually very recently, right, on the 16th of June, 2022. Right. So that is something that's not too good, right? It might imply that there is some bearish momentum to come, right? If this continues to trade below this long-term uptrend line, right? There could be this new downtrend forming. Right, and this was something that was shared by FINANCIAlmissy earlier as well, right? A bit differently though, but I used the 200-day SMA, right? So this is the 50-day SMA and the 200-day SMA, right? So So the 50-day SMA is the purple one, right? This line over here, right? And the 200-day SMA is the black line over here, right? So you can see the 50-day SMA has been hovering above the 200-day SMA, right? Which is a good sign on the long-term basis. But there is some concern, right? Recently, when you see the gap here, it's actually narrowing, right? It actually narrowed here, right? Before it went back up again, right? As the price went up, right? But now it's narrowing again, right? So if it makes a cross, right? If the 50-day SMA crosses below the 200-day SMA, then that could be the confirmation of bearishness for this stock, right? But of course, SMAs are typically a bit of a lagging effect, right? So we only use this as an indication. Right. So if we zoom in, right, you can see that I actually drawn a few more lines here, right, on the daily chart as well, right? And this is something known as a descending channel, right? With the downtrend line, right, as well as a lower channel line, right? Right. So this is you can see that the price has been trading within this channel, right? Within this descending channel, right? It's trading below this downtrend line, right? The short-term downtrend line, and it's also trading in this descending channel, right? So this descending channel, in a way, you can see that quite clearly, right? That prices are forming a lower high and a lower low, right? So lower low. Sorry for the typo here, right? But basically, that is an indication of a downtrend, right? If this continues on, right, it will just get lower and lower and lower. Right, so you can see that it is, on the verge of, testing this lower channel line, right? So it might test it, it might not test it. We shall see how it goes, right? But this is it has been tested previously, numerous times before here in the past, right? So there could be that possibility of testing this downward lower channel line before it bounces back up again. Right, and we also can look at horizontal support levels as well, right? So you can see that the first horizontal support is actually at this level, right? Very close to our current level now, our current price now, which is 88.4 US dollars. Right, that's the first horizontal support. Right, so it was tested here previously, right? And it actually went slightly below before it closed up, on Friday, right? So if this first horizontal support breaks, right, it might move on to test the lower channel support, right, as the support, right? But if that breaks as well, then we could be looking, right, at this second horizontal support level at about 84.8 to 85 US dollars, right? Right, but if it bounces back up, right, then we could be looking at resistance levels, right? And some of the resistance levels are shown here, right, for horizontal resistance levels. The first horizontal resistance level is around 95.1 to 95.2, right? So it used to be the resistance here as well as the support over here, right? And if that first resistance line breaks, right, and the downtrend line also breaks, right, then we could be looking at this higher resistance level, right, at about 100.6 US dollars, right? So it was tested here, right, and somewhere here as well, right? So this is something to watch out for, right? If price actually makes a bounce back up and actually has a further upside to it, right? And MACD wise is also a bit bearish. It's actually looking negative on the daily MACD, right? And there is currently no signs of it becoming less negative yet, right? You can see it's still strongly negative over here, right? So in summary, right, there are both bull and bear arguments for this particular stock, right? On the bull side of things, the 50 SMA is still above the 200-day SMA, right? And we are approaching numerous support levels, right, such as the first horizontal support as well as the lower channel support, right? But there are also bearish indications, right? Quite a number as well. For bearish side of things, it actually broke that long-term uptrend line, right? Tested since 2020. The gap between 50 SMA and 20 SMA is narrowing, right? it is trading below that downtrend line, and it is still trading within that descending channel, right? So the downtrend might still persist. And last but not least, right, MACD, right, on the daily chart is also still negative. Right, so what should we do for trading? Right, what should we do for trading? So over here, right, before I delve deeper, just like to point out that this is my own opinion, right? Please do your own due diligence before buying or selling any stock, right? So so with that being said, right, I'll advise people to actually wait and see first for this stock, right? Check to see whether that first horizontal support or lower channel line is actually convincingly supported, right? If it is, there could be a bounce back up, and we can take the opportunity to go long, right? But of course, we also have to check, additional confirmation, right, of MACD. If it becomes less negative, right, then that could be that confirmation to go long, right? So you can perform a long trade, right? This is a short-term long trade because it's still in the downtrend, but we're just catching that bounce back up, right? And with the first horizontal resistance on the upper channel line as the take profit price, right? You can set the stop loss slightly below that lower channel line, right? Because that's actually acting as a support. But of course, if you want to play safe because it is in a downtrend, right? So technically, you might want to actually follow the trend, right? So we could perform a short entry, right? But we probably have to wait a bit longer, right? Wait to see the price hitting the upper channel line, right? And it actually cannot break above that upper channel line, which is actually that downtrend line. So actually, it means it's convincingly resisted, right? And you see that the MACD actually shows signs of becoming more negative, right? That we can then perform a short trade, right, with a stop loss set slightly above that upper channel line, right, or that downtrend line, right? So that is a safer option if you're doing a short trade, right? You wait until you hit that resistance level and then perform that short trade, right? So you can go both long and short, right, for this particular stock. But let's, you have to observe how it goes, but the price action and whether there's any confirmation of all these indications, right? Yep, so that's my take, right, of this particular stock, right? And if you like our sharing for today, right, don't forget to hit that like or love button, right? As well as share this video, right, so that more people can benefit from our sharing, right? And if you haven't done so already, you can follow us on our social media pages, right? I have my social media handles over here, and FINANCIALmissy has hers over here. Right, and you can leave a comment, right, in the comment box below, right, on what you think of our sharing for today, right, as well as suggest the next stock for our next sharing. Right, and you can tune in every Sunday, right, as you already know by now. We do this every Sunday at 4 p.m. Right, so next week will be on FINANCIALmissy's Facebook page. Right. And that's all I have for you guys. I hope all of you have gleaned something very useful. Yep. And thanks for the comments, Luke and Nicholas. Right. Glad that you all have learned something very useful, right, today. And I hope all you guys who are also listening right now also learned something very valuable for today, right? And as the market is very volatile now, right, do stay safe, do trade or invest with caution, right? You don't want to lose your hard-earned money, right? Once again, I think we need to emphasize that because the times the market is getting increasingly volatile, right? You never know when we're headed for a recession, right? But no one knows when a recession will come. So do be safe, and do protect your capital, right? Protect your money, right? FINANCIALmissy, do you have any last words to add?
Nope, I nothing to add, but please be safe out there. Everything is very volatile, and you do not want to take unnecessary risk. So manage risk is very important.
Yes, agree. Yes, especially in these times, we need to manage our risk very well, right? Do stay safe, right? Do stay safe, everyone. And I wish all of you all the best of luck for the upcoming week, right? And let us know, right, what stock you like us to pick, or delve into next week in the comments. If you have any burning stock you like us to analyze, right? But if not, we'll see you guys again next week with another US stock. right? See you guys, right? Happy Father's Day once again, and adios. Bye bye.
Adios.